amortize our this we amortize our um this thing present value of. Then before then we need to also look at the present value. We have the present value we need to consider at least liability, present value of this payment, which is how much we have funny 917,600. So it is this present value of this payment that we actually use to determine our lease liability. So let's pick the first thing. The first step is depreciation. So you know this asset has been with these people with the lessee. So depreciation based on the period of time the lessee has been using this asset. So depreciation value, depreciation on ROU, we call it R, right of use, ROU asset. So it will just be on straight line method as usual. So how many years are we calculating? That's 20 years. We are calculating based on 20 years. So we know straight line, that's depreciation will be, our depreciation value is, depreciation formula will be um the cost of the, that's ROU, we have ROU divided by this period, this period, abi. So what is our ROU? That's a 942,600 divided by how many years? 20 years. So what is our value? What is our value, please? Hello, what is our value? Hello,
Four seven
how
two
much
one
is our value?
47130
So we have 471,
47130.
47, 47130. Abi. So
Yes, sir.
we've recognized our depreciation on that. So the next thing is to determine our amortization. So and we know this one is yearly. So for the two accumulated depreciation for the 2 years, accumulated depreciation will just be this value 47,130 times, it's for 2 years. How much do we have?
94,260.
So we have 94,260. So next thing is our amortization table. So we can just calculate our carrying value, carrying amount, carrying amount because carrying amount will just be the ROU, which is this value 942,600 minus 94,260. So what is our value? What is our value, please? What is our value?
84, 83, 40.
So we have 80, 84,
83,
8,
40.
34. Abi. So the next thing we need to consider is our amortization. So amortization table coming from amortization. We know the first thing that should come to our mind will be our opening value. Opening balance or opening value at the commencement day. How much is our opening balance? That's 97. That's the present value of our lease payment. The present value of our lease payment will be the opening balance. Opening balance. And we are being told that at the end, the $80,000 is being paid at the end of each year. It means we have to calculate our finance charge. After we've calculated our finance charge, then before the payment will be what? Will be made. So we now have, since this is our opening balance, we say 917 600. So this now let's formulate our table. So we have the year, the opening value, or we say opening balance, then the interest rate, the interest value, at what is our interest rate? Our interest rate is what? 6%. Abi. Then closing rental income, rental payments. Then we have our rental payments. Then closing balance. So now let's speak. So year one, we are calculating for 2 years. Year one, what's the opening balance? This is our opening balance for year one. Abi. So interest rate 6% of the opening balance. How much is that? 6% on our opening balance. How much is that? Hello, are you there?
I'm here, sir.
I said 6% of 917.
55
What? So we
55056
have 55. We
056.
have 55056. So how much is being paid at the end of the period? 80,000.
80.
Abi?
Yes, sir.
Okay. Then what is you have to this one will be in minus will be in minus. Abi? So what is our value at the end of the period?
Eight nine two
We have 892. I'm coming.
2656
892 656. Abi?
Yes, sir.
Abi?
Yes, sir.
So year two will just be depending on the number of years you are being asked. This these are closing balance last year. It will be opening balance this year. This year, yes or no? So what's
Uh,
6% on this?
53559
So
point
we
three
have
six
53. 559.
559.36.
Let's round everything up as a whole number. So
That's the difference.
we still have the same thing. Abi? So
Yes, sir.
what is our value at the end of the period?
Mm.
No, it's not. Just equal. Is that what you get? Hello? Is that your final answer?
I'm coming, sir.
Okay, I'm still waiting.
Yes, sir.
Okay. Now we are to calculate we are to determine the financial position. We are to prepare financial position extract. So we have assets, then our amount in USA, you can just make it like this. So right of use assets. So we are using the carrying amount. How much is our carrying amount? This is the carrying amount we have at the end of the second year. Abi, so we can just
Yes,
pick
sir.
it then. Then liability also, lease liability. The liability will be, it will just be a lease liability. So we have a lease liability. What is our lease liability? This is the value we have. Abi, that's our lease liability. Did you get it? So that's our extract. Let's now assume we are being told that we should prepare P or L extract, profit or loss extract. So what you just need for the year two, for second year, it is just your finance charge. How much is the finance charge? Which is the interest rate? This for the second year, which is 53,559. That's a finance charge for second year. That's all. Do you understand? Do you understand?
Yes, sir.
Now let okay. Now let's. I want to quickly explain something. Now let's now assume you are being asked to now prepare this. Let's assume the rental payment is an advance payment. You know this one is an accrued. It will be at the end of the period. But here the question tell us that the payment is being done um at the beginning of the year. You know, then it means the company has what? The company is paying in what? In advance. Are we together? So this thing will just change. I just want to, in case you have a question like that, so your opening will still be the same. You still have your opening like this. Abi, then your rental payment will be here. Just change your position. Then your interest, then your closing balance.
Please, sir, when do we do it like this? When are we supposed to do it like this?
If you have it in the question that there is the rental payment is being paid in advance, like this question, like this question, we are being told that lease payments are paid, lease payments are 80,000 naira per year during the, okay, I want to, this is the, this is what I'm saying. Can you see where can you see that the question states that all payable at the end of the what, of the year? It means the rental, the lease payments are being paid at the end of the what, of the year. Let's now assume it is now at the beginning of the year. So this is now how to treat, this is the way to treat it. Your amortization table will be like this. So year one, you still have your this thing, abi. So you are paying, then before then, so your interest rate will now be applied on the difference between this and this. Do you understand?
Okay, sir. Yes, sir.
So what is the interest rate, what is the difference between this and this? So the difference is just equal this.
837,600.
Okay, now apply your 6% on it.
50 to 56.
So we have 50, 50 to 56. Abi. Then your closing balance will just be addition of
Yes, sir.
both. So we now have equal this plus this. Do you understand?
887,856.
So year two will
Yes,
just,
sir.
year two, you know your closing balance here will be your opening balance the following year. Yes or no?
Yes, sir.
So we have it like this. Then you will still do your, you will still have your payment. Then Abi, then what is your percentage?
Forty-eight 471.
We have 48,471. Then addition of both. Do you understand? So this will now be your lease liability at the end of the period. Lease liability will just be this. At the end of the second year, will be this. Do you understand? So if it's the first year, it will be this. Do you understand? Any question? Any question?
No, sir.
So the next on Sunday we can just conclude this because of the time has gone. We will look at a simplified approach when there is short term or low value list. We will look at that. Then we will also look at sales and lease back. We have sales and lease back, whereby there is what? You've made your sales, then you can also get it back in form of what? In form of lease. Are we together? Are we together? So
Yes, sir.
how do we amortize, and then what are the items that will be what will be their value that will be recognized in our what? In our statement of financial position or statement of um statement of profit or loss. So we need to determine that in our next class. So we round everything up on Sunday. So thank you very much for joining the class. I hope
Thank you,
preparation
sir.
for exam is going.
We're trying.
The Lord will help you. Then tomorrow is for mock.